Is the stock market in 2020 going to crash? Great question. What up, it's your girl, Joe Chris, and I'm back with another one. So you want to invest in the stock market, but you have no fucking clue what you're doing. Welcome to the club. What's up, guys? I'm Krispyshorts. Welcome to my channel. Take a second to subscribe real quick. Smash that like button because this is going to be a hot vlog. I'm going to make you so much motherfucking money. The #1 reason millennials don't invest in the stock market because they, 1, don't know how to do it, 2, have no idea what the fuck is going on. All right, we're going to hit the streets and see if millennials know what the stock market is. Excuse me, man, can I ask you a question?
Sure.
Explain the stock market.
It involves money.
What?
I don't know.
You are not alone. CNBC and all the other platforms make it seem nearly impossible to understand anything that's going on.
What concerns us, I think, the most is really the incredible strength of the bonds.
The yield curve is inverted. If the tariffs increase.
And the flattening of the yield curve, I think, was
If you haven't invested in the stock market since 2008, we are in an 11-year bull run. Stocks are up over 400%. Every single year, you've got people saying there's gonna be a market crash, there's gonna be a recession. You got people on the other side saying, I'm all in. If any of these fund managers at the big hedge funds or CNBC knew exactly what was going on and had a crystal ball, they wouldn't have a job because they'd be so fucking rich that they wouldn't need to give their opinions on TV. Let me give a piece of advice. No one in this entire universe, except for the big man upstairs, Santa Claus, has any clue where the stock market's going. Now, there's leading indicators, whether there's global economic concerns, whether there's a trade war going on, whether there's a real war going on, potentially. These things all affect the stock market. The stock market is one big emotional roller coaster. That was supposed to be a roller coaster. I don't have a real roller coaster. You want to talk about bananas? Everybody's opinion on the stock market is bananas. You see, banking analysts get paid to give their opinions on the stock market. Whether they're right or wrong, people click, people view.
Bull markets thrive on disbelief.
Investors are fearing that a global recession might be in the cards.
Think this market's going lower? It soars!
Recession risks are on the rise.
Risk of recession.
Real risk that we're going to see a slowdown.
Well, the rally's over.
This slowdown that we're witnessing in the global economy is coming.
Bye!
It's a bull market.
I think that what's happened here is the recession.
Recession.
Technical recession.
They run ads on these articles that you click. You got half the people on one side saying stocks are gonna go down.
Recession.
Recession.
Technical recession.
You got half the people on the other side saying stocks are gonna go up.
Bye!
50% of them are gonna be right. These analysts just take a stand and put out an article so you'll click it. The best advice I can give you is that all these analysts have a job to do. Put out an opinion. The opinion doesn't have to be right. If I want you to click on an article, do you think I'm gonna say the stock market's crashing or stocks were up a little bit today? It's all noise. And all this noise makes the stock market feel overcrowded and all this different news coming from different directions. It makes it feel like it's impossible. Which stocks do you invest in and which site do you do it through? That's a great question, Sarah. No matter what anybody tells you, it's very easy to put your money in the stock market. There's apps like Robinhood, TD Ameritrade, E-Trade, all of which don't charge commissions anymore to trade.
Schwab and TD Ameritrade are the two large platforms.
It has never been easier than today to invest your money in the stock market. Now, where the f do I invest? Invest in companies you like. You go to Starbucks every day, buy Starbucks. Because every time you buy a $15 coffee, it adds revenue to their books.
Starbucks nearly 29%.
You are a shareholder of that company. Each dollar of revenue makes that company more valuable.
And you can see, I mean, this thing is kind of mark time, okay?
Plus you get to say I own a piece of Starbucks. It's pretty cool. But Chris, the stock market is so high. Do I really get in now? The answer is you were supposed to get in yesterday. The stock market is a very long-term investment. Get that through your head. Whether you put in money now or next year, you don't touch that money for 10 or 20 years. That allows the stock that you own to generate revenue growth year over year over year over year, called compound interest. Compound interest is the craziest thing you could possibly imagine. Your money works for itself while you do nothing. So instead of buying a bar tab for $100, put that into Apple, put that into Facebook, put that into Uber, or any other company you might use. No one has a crystal ball. So trying to time the stock market is inevitably impossible. But that's okay, because what you're doing is investing in your future. Guys, it boggles my mind that they don't teach you this in school. I learned a lot of this in finance, and then I had a finance job after college where I was a stock trader. Stocks on a short-term trend are very volatile, up and down every day, a couple percentage points, potentially. If you back out and take a step back, a macro approach, they all have a long-term trend. All right, so the best analogy for the stock market is the dog walking example. Humans are the long-term trend headed in one direction. The dog represents the stock's daily movement. It's choppy. It goes up, it might go down, it might go sideways, it might stop. But over the course of the walk, it moves in the direction of the human, the long-term stock market trend. Now, of course, there are some losing picks out there, but the good companies with solid CEOs and solid revenue streams seem to always have the right trajectory, fucking up. This brings me to my next point. Is the stock market in 2020 going to crash? Great question. The answer is no one fucking knows. If you tried to time the market at any point, let's say you got out in 2008 and you avoided the big crash and you stayed out, you would have missed a 400% upside the last 11 years. No one could have predicted that, except one man, David Tepper. David Tepper, you ask? He's a hedge fund manager who runs Appaloosa Management. He's worth $13 billion. One year he actually made $2 billion at his hedge fund. That's crazy. I can't even comprehend how much that is. Anyway, in 2008, he said the next decade is gonna be the most profitable we've ever seen. And boy, oh boy, was he right.
Soars!
David was recently asked on CNBC, if you don't know what CNBC is, it's a TV show entirely dedicated to the stock market. They asked him, David, what are your thoughts on the market? He said, I love riding a horse that keeps running. Meaning this, he has no idea where the stock market's going, but it's a strong bull market. Bull market means it's going up, bear market means it's going down. He has no idea the direction of the stock market, but he's not getting off this train because it keeps moving north.
This is the Polar Express!
That is the smartest advice I can give you. Stay invested in the stock market. There will be dips, but don't fear and pull your money out. That's usually what happens in a recession. Everyone gets scared because it's an emotionally driven platform.
Sounds to me like this is your crucial year. If I were you, I would think about climbing on board.
It's happened to me when I've lost tens of thousands of dollars in one day, but I didn't pull out. That's what she said. Because I believe in the US economy.
America! America!
And looking back 100 years, the trend has always been this. All right, it's a wee bit cold outside. We're gonna do a little Q&A session. I asked people earlier today to respond to my Instagram story if they had any questions about the stock market before I posted this video, so I wanted to put it in here. So let's go through a few of them. I like to do the live interaction, you know what I'm saying? All right, Crispy, what do you think of marijuana stocks? Are they gonna rebound ever? Marijuana stocks had a tough year last year, the year before they all popped, in hopes that marijuana will be legalized everywhere. I think it's a really risky investment. I wouldn't put your money into that. If you want to, put a small percentage of your bankroll in there. You never know, it could pop, but it's a high risk investment, which means it's probably gonna lose. Number 2, can you do a stock market video for beginners 101? This is kind of it. Thanks, Caitlin. I use TD Ameritrade personally, but I think they're all the same. They're no fee, very simple to use. It's like saying, do you prefer Dasani or Fiji? Crispy, buy into Boeing. This is the cheapest you will see it. I got it at 308 yesterday, but I think you should jump on it now. Tip number 1 about investing in stock market. Do not listen to anybody about their stock picks. They usually have no idea what they're talking about. I've paid for that lessons many times. Another thing about investing in the stock market, you do learn lessons the hard way, but I think it's a rite of passage. There's a lot of times I thought a stock was gonna go up and it didn't. It's just a very humbling feeling. Here's a great question from Julia Costa. How often do you check in on your stock to see how it's doing? Great question. 1, I would check in on the stock every single day. It's great to follow, it's fun, and you learn a little bit about the direction of the stock and how it's doing for the year. It's great dinner conversation. No, it's not. Crispy, what sector do you like? I like tech always. He asked me if I like buying these weed stocks. He listed a bunch of them. Again, I don't like the weed stocks. Why is everybody into the weed stocks? They're very risky investments, guys. If you want to lose your money, I'll say it again, put a little bit of money in there if you want to take some risk. How much of your portfolio consists of dividend stocks? That's a great question. Actually, none of mine, which is a very big mistake. Dividend paying stocks are stocks that report quarterly earnings, and depending on how much revenue they do, they'll give you an earnings per share. They'll give you earnings per share that you have. So you get a nice little check in the mail or give you money to reinvest in the stock market. Dividend paying stocks, always great. Usually the bank stocks do that. Where'd you buy that shirt? I don't know. And lastly, are blue chips the only safe play to avoid drops if there were a recession? The answer is no. In a recession, mostly everything gets hit. All major stocks and the entire market usually come down in a recession. It's very normal. There are safer things that you can be in a recession, like a mutual fund. A mutual fund is a basket of stocks that's very risk averse. But the lesson there is recession, everything gets crushed. It's tough to swallow, but you gotta know it's gonna come back. Just pick solid companies. Don't go picking penny stocks, which are stocks below $1. That's done for the Q&A today. I hope that helped. Did that help? I like this. I'm gonna do some more of this. Now, if you wanna play it safe, you can invest in the broader market, basically the S&P 500 or the Dow. That's just a basket of the biggest companies in the world, and depending on their direction as a whole collective, that index will follow. So if I have an interest in technology, I'm gonna invest in the NASDAQ. The NASDAQ is a group of stocks like Apple, Facebook, and other tech companies bundled into one snapshot view. Now, a riskier investment to that would be investing into individual stocks like Uber. Uber got crushed. Uber IPO'd at $45. It got crushed months later to $26. I bought it at $27. It's now at $35. There's a lot of opportunity in this market for companies that you believe in. So what you want to do is take any income that you have to spare and put it into the stock market. Now, you do not have to invest it all. You can keep it in cash. Cash just means it's sitting on the sideline waiting for a drop in prices, which is very difficult to time. Or you can invest in an index like the S&P 500, the NASDAQ, or the Dow, or individual stocks. The younger you are, the more risk you can take. I'm 34 years old and I'm balls deep in the stock market. Will I get killed if there's a recession? Of course I will, but that's when I'll buy more. Every downturn in the market provides opportunity, especially in the last 10 years. Anytime there's been a 5 or 10% dip, it's presented an incredible buying opportunity. And if you're scared, you're going to lose. That's why they say, scared money don't make money. Now, day trading in stocks is very difficult and I'd never recommend that. I tried it once, had no idea what I was doing, and I got fucking murdered. Pick a stock that you like, watch it for the next week or two, and just watch how the price moves up or down every single day. And then you can get accustomed to the stock market. Then, and only then, can you put in a little bit of money into the stock and just watch it grow. It may go down, you might want to buy more. Put your money into the stock market rather than a savings account, because a savings account that the banks offer you only give you 1 to 2% interest. With inflation, you're losing money. How am I losing money if I'm earning 1 to 2%? Oh, inflation's a crazy thing. You remember when soda cans 3 years ago cost 50 cents and now they cost $1.50? That's inflation. The power of the dollar weakens as time goes on. Your dollar is worth less than it was a year ago. That's why your parents bought a house for $10,000 back in the 50s, and now they're $1 million. So the current rate of inflation is usually 1 to 2%, whereas the stock market gains about 7 to 8% a year. And this is dating back for 100 years. So stop putting your money in a cheesy savings account. You will not gain wealth that way. The answer to the title of this video is the stock market going to crash in 2020. No one knows. Put your money in the stock market. Let it ride and work for itself. Don't worry about the ups and downs. It'll eventually correct its course. All right, hope you guys like this video. Please subscribe. Leave me any comments you might want me to answer in the first 10 minutes notification squad of this video, and I'll try to get back to you. I love you guys. Hope this was helpful. I'm out, and I'm still sick. I gotta go. Share this video with anybody who needs it. Can you say viral? All right, invest in the stock market.
Don't embarrass me.
Invest in the stock market, okay? Which stock do you want to buy?
Apple.
Great pick. Apple's a strong stock. That was a good pick.